Hi traders, welcome back to the weekly forecast for the new trading week starting on 18th of March. As we dive into this week, brace yourselves for an action-packed week as we have a plethora of monetary announcements from Bank of Japan, Reserve Bank of Australia, US Federal Reserve, Swiss National Bank and Bank of England. These pivotal events are bound to create waves in the markets, presenting us with new trading opportunities. So get ready to decode the charts with me. So let's begin the analysis with dollar index. And here I am on dollar index chart. I'm going to change it to weekly time frame. And I need to clean up the chart. So here's the weekly time frame chart in front of us, turning into a line chart. And as we can see that it has formed a downward trend here, and now if you notice, if we join the highs and the lows, it's making a bearish flag. So after this massive up move, dollar index has entered into the corrective phase. So first phase of correction is over, and right now we are into this flag formation, bearish flag formation. And you can expect price to remain range bound for a while, and this is the expected continuation to the downside. So here we can apply Fibonacci retracement starting from the lowest point of the swing to the highest point. Now I'm going to apply Fib extension in the downward direction, connecting to the first low and the first lower high formed. And if you notice, we have the confluence at 70%. So 61.8 of Fib extension in the downward direction in confluence with Fib retracement 70% of the previous bull run. So this is the expected target for dollar index in the coming days and weeks. Right now, based on weekly MACD, it's already making a bearish cross. Not yet complete, but it is going to form a bearish cross. So I'm expecting bearish continuation to the downside. Moving to daily time frame, the sellers have lost momentum, reaching to this Fib support area, and I can see that sellers are exhausted, so it may correct upwards in the short term, and then we can expect continuation to the downside. Moving to 4-hourly chart, and again turning into a line chart. If you see here, we have a sequence of highs, lower high, and now we have a low, lower low and lower low. Now based on the last two lows, we have bullish divergence formed, so we can expect short-term correction to the upside and then continuation to the downside. Moving to 1-hourly chart, now based on bullish divergence formed on the last two lows, this is your BOS point, which is already broken. So we can expect dollar index to rise in the near term for very short term, and then continuation to the downside. So short term plan is bullish for dollar index, very short term. The medium to long term plan is bearish. So you can adjust your dollar based currency pairs, or you can trade your dollar based currency pairs accordingly. Now the next instrument I'm going to talk about is Australian dollar versus Swiss franc. Now again, I'll be starting from daily time frame. Now based on daily time frame, I'm just going to clean up my chart here. So here, if you notice, I've already applied the trend lines. So we have a falling trend line here, and we have a triple bottom here, flat bottom here, and the price has broken this falling trend line, which means the buyers have gained momentum. But at the same time, I can see weakness coming in the buyers because of the bearish divergence formed on MACD histogram, and the buyers were not able to break through the previous resistance point. So this is the sign against the buyers, showing weakness in the buyers. And if you notice, when I zoom in, the market has bounced in the bearish direction precisely from this resistance area. Based on candlestick patterns, it is already bearish. So daily time frame turning bearish. Let's see how 4 hourly is behaving. Now 4 hourly chart has formed double top with bearish divergence. So here we have double top formation with regular bearish divergence being formed on MACD histogram and MACD lines both. So it's double bearish. So once the sellers they break below this major support level, we can expect further continuation to the downside. So AUD franc in the short term looks bearish to me. Now let's move to 1 hourly chart. Moving to 1 hourly chart, I can see the sequence of high, lower high, lower high, and lower high, along with lows, lower lows, and lower lows. And right now we do not have any signs against these sellers. So AUDCHF in the short term remains bearish. Now what could be the potential target? Moving back to daily time frame, turning it into a candles chart, applying Fib retracement from the recent low to the recent high. So even if you expect 50 to 60% retracement, then our potential target to the downside is here. So this is a zone to be targeted in the downward direction. And let's move to 4 hourly chart. So I'll be entering into a sell setup once we get the confirmation after the break of this support. So break of structure is required, then we need a pullback. So you can sell after the pullback. So you can sell somewhere around this region, that's around 0.5800 or 5810. And let's apply Bollinger here. Let me add Bollinger to my charts. And you can use Bollinger as your stop loss after the corrective move is done, or maybe you can jump to lower time frame, that is 1 hour, and you can target this area. So let's look at the potential risk and reward in this trade. Short position around this area with stop loss maybe around this area, and the target is 5723 or 5725. So you can easily get 2 times. So this is a plan for AUDCHF in the upcoming week. Now moving to the next currency pair, next instrument is Euro versus New Zealand dollar, and starting from the daily time frame. In fact, I'm moving to weekly chart here. Now based on weekly chart, I've already applied Fib extension in the upward direction, turning it into a line chart, and based on Fib extension plotted from this swing low to the first high and then covering the higher low, we have an important Fib extension level of 618 at 1.7448, and currently the market has taken support exactly on this level. And the next major extension or Fib level coming from the higher time frame retracement plotted is at 1.8417. Now this is on a weekly time frame. So currently we are at 1.7880. So if you notice on a weekly time frame, the risk and reward is not so lucrative. It does not make sense. It's almost like 1 to 1. Yeah, not even 1. So we need to go down to a lower time frame, that is daily. Now here we have double bottom with bullish divergence. Now once you get the break of structure, you can expect short-term pullback and then continuation to the next fib level, that is 1.84. So daily chart remains bullish. We have a sequence of low and higher low and higher low along with double bottom here. At the same time, we can apply a falling trend line here, starting from the highest point and joining the lower highs. So we may face falling trend line resistance around this area, then get ready for the pullback and grab the opportunity to buy on the dip and target 1.84. Moving to further down, lower time frame, that's 4-hourly chart. Now based on 4-hourly chart, we can see that buyers are in total control of this currency pair. So we got bullish divergence here. We got the break of structure here, and we also got the required pullback, the retest, and now it's moving upwards. So we can apply Fibonacci extension on this move. So here I'll be connecting from the lowest point to the first high and higher low formed on this move. So right now we have reached precisely to 61.8 extension zone. So that is at 1.7895. So we can expect some short-term resistance here or short-term pullback and then continuation to 1.8062. So immediate upcoming target in the upwards direction is 1.80. Now let's move to 1H. On 1-hourly chart, I can notice that there is no bearish divergence, but there is some slowdown on histogram. So we have higher high formation with continuing bearish divergence, but MACD lines are still creating higher highs. So which means a short-term pullback is anticipated and it can be expected because of this resistance level and then continuation to the upside. Moving down to 15 minutes. We have bearish divergence coming into play. So expect short-term pullback, but the short-term pullback should be taken as an opportunity to buy this instrument. So going back to 4-hourly now and applying the fib retracement from the recent swing low on 4-hourly to the current high. So we can expect correction towards 50% to 61 and then continuation. So this is the plan for Euro New Zealand dollar, buy on the dips. Now the next instrument is New Zealand dollar versus Canadian dollar. Okay, let me clean my chart here. Moving to a line chart. Now based on a line chart, if you see, the pattern is bearish here because we have a sequence of high, lower high, lower high, lower high, or rather double top equal high, followed by lower high, lower high, lower high, and lower high. At the same time, we have a sequence of lows here and higher lows here. So we are locked in a triangular pattern. So we have lower high sequence coming from the top. At the same time, we have higher low being formed here. So the price is consolidating. It's locked inside this triangular pattern. Moving back to daily. Now here, if you see, we have high, higher low, a new higher high, higher low, but now it has failed to create a new higher high. So this is the point. So the buyers are weak and they are unable to create a new higher high on this chart. Applying Fib extension, Fib retracement, starting from the lowest point to the recent most highest point, we can expect correction at least up to 61.8, and it is also coming on the rising trend line here, exactly on the rising trend line. At the same time, if I'm going to apply Fib extension in the downward direction, so we have confluence of Fibonacci 100% extension in the downward direction coming exactly on the Fibonacci retracement 61.8 in confluence with the rising trend line. So there is a very strong confluence that New Zealand Canadian dollar pair is expected to reach towards this area, that's 0.8113. so it looks bearish to me. And moving to 4 hourly now, even on 4 hourly it is forming lower highs and lower lows. So we got double top here with bearish divergence. We got the breakout structure. After breaking the structure, we got the perfect retest, and now it's continuing in the downward direction with no signs against the sellers. So I do not see any bullish divergence being formed right now. In fact, the sellers have gained momentum on 4 hourly chart. On 1 hourly chart, I can see that the sellers have reached an important Fib support area, and I can see some short-term slowdown here. So we can expect a pullback on an hourly time frame basis and then continuation to the downside. So any pullback on New Zealand dollar versus Canadian dollar is to be taken as the opportunity to sell. So you can expect pullback towards the falling trend line or maybe towards this horizontal resistance area. So that's 0.8290 to 0.8280. Rise towards this area to be taken as an opportunity to sell. Moving to 15 minutes. On 15 minutes, it's still looking bearish to me. So only on 1 hourly chart, it's forming some bullish momentum. Otherwise, it's a confluence towards the bearish side. So we have a lot of confluences towards the bearish side. So the plan remains to sell on the rise. And now, finally, gold. Now I'm moving back to weekly time frame, and I have applied Fibonacci extension on multiple bullish cycles here. So the first Fib extension has been applied on 2015 or 16 low to the first high being formed and first higher low. Then second Fib extension is applied on the first high low formed, higher high formed, and next high low formed. So we got the confluence here, and here the extension level was 2174. In the recent weeks, price has moved precisely towards 2174. In fact, we got a short break above this level, but the price did not sustain above 2174. Now we have duplication of Fib extension lines between 2100 to 2120. So dollar is range bound, and it is expected to be range bound until the Fed announcement. So if dollar gets correction in the upward direction in the upcoming week, so we can expect some correction in gold, and the levels are the first anticipated levels are 2100 to 2120. So this is the zone. So you can expect correction and then continuation to the upside, because I do not see any signs against any bearish divergence being formed on MACD for gold. So weekly chart is purely bullish. Moving to daily chart now. Now based on daily chart, again, I do not see any bearish divergence being formed on the daily chart, and we have a sequence of higher highs on price along with higher highs being formed on MACD. So no divergence against the buyers. The only thing is the market looks overbought, and I can see some slowdown being formed on the last bullish block of MACD histogram. I'm moving to 4-hourly chart. On 4-hourly chart, yes, I can see some weakness on the charts. MACD is looking bearish to me. So here we got the break above 2174, but it was not a sustainable breakout. Immediately we got the correction below 2174.75, a retest, a perfect retest of 2175, and now continuation to the downside. So I can apply Fibonacci extension in the downward direction on this corrective pattern. So connecting first high, first low, and then the lower high. So the extension 61.8 is at 2152, followed by 2134 or 2135, and we can, if it continues further down, I'm just changing the colors here. Yeah, so if it continues further down, then after 2135, the next level in sight is 2107 and ultimately 2090. So these are the levels to be taken as an opportunity to buy. So I'll be adding buys on these levels. So first you can add somewhere around 2150, 2142, 2135, followed by 2107 and ultimately at 2090, and you can target the next Fib extension level plotted on the higher time frame. So I'm moving directly to 3-monthly chart, and if you notice, the next Fib extension level which is not yet achieved is around 2270 to 2325. So buy on the dips, hold your buy trades for short term to mid term, and expect gold to touch 2270 to 2325 in the coming weeks and months. But for the recent week, for the upcoming week, immediately the plan is to not to get engaged into a sell trade, because my plan is bullish. So I'm not planning to trade gold counter trend. I'll be waiting for this correction, downward correction, to be over. Rather, I'll be accumulating my positions in the buy direction. So this is my plan for the upcoming week. If you are trading any other instruments and you want me to analyze the charts, please feel free to contact me. And show your support, subscribe to my channel, and have a profitable trading week ahead. Bye-bye.